Good evening and welcome to this meeting of the Governance and Audit Committee. My name is Councillor Justin Wrench and I will be chairing this meeting. Before we proceed with the business of the meeting, I will start by going through a few items of housekeeping. So this evening we are not expecting a fire alarm, but should one sound, please can I ask members to use the exit to this side of the chamber and assemble out onto the car park. Please can I make sure that your phones and other devices are switched to silent. And if members wish to speak during the debates this evening, please can you indicate by raising your hand. I'll make a note of that and come to you at the appropriate time. This meeting, as always, is being webcasted, so please can I remind everyone to use their microphones when speaking, but also to turn them off once you're finished. I will now proceed with the items of tonight's meeting. So, agenda item 1, apologies for absence, and they have been received from Councillor John Bohr and Councillor Bob Wright. I don't believe we have any other apologies. Okay, thank you. I will now proceed to agenda item 2, declarations of interest. So do members have any disclosable interests, other pecuniary interest or non-pecuniary interest that they wish to declare this evening? And please state them and the nature of your interest. No? Okay, so as we don't have any declarations, we'll now move on to the minutes of the previous meeting, agenda item 3. So could I please have a proposer to approve the meeting minutes of the meeting that took place on the 9th of October? Thank you, Councillor Ramage. And can I have a seconder? Councillor Prime, thank you. So the minutes have been moved and seconded as an accurate record. All those in favour, please raise your hands. Thank you, members. I'll just, as they have been approved, I'll just take a moment just to sign those. Thank you for your patience, everybody. We will now move to agenda item 4, which is public question time. I can confirm that there are no registered speakers for this evening's meeting, so we'll now move to the main business of the meeting and start with agenda item 5, which is the External Auditor's Audit Completion report for the financial year ended the 31st of March 2021. So this report is set out on pages 5 to 54 of tonight's agenda. And I'm pleased to say that we are joined tonight by Aphrodite Lefebvre and Sebastian Evans from BDO, and they will be reporting on this agenda item alongside Phil Myers, our Head of Finance. So firstly, I'd like to welcome Aphrodite and Sebastian, but I'll start by just introducing Phil before we lead on to the members from BDO. Thank you, Phil.
Okay, yes, thank you, Chairman. So I wasn't intending saying too much on these items. As the committee knows, this meeting was sort of scheduled as an extra meeting to deal with several items relating to the outstanding audits that have been the topic of many of our meetings over the past months and that. So I think so. What we've got this evening is a series of reports, and this one is obviously the first of those, which are essentially the BDO's reports on the different years' accounts and reflecting the different stages that they are at the current time. So, if it's okay with you, Chairman, I wasn't really going to say much more because I think the committee will really want to hear from the auditors on these.
Yeah, absolutely, and I appreciate that, Phil. Okay, thank you. Over to you, Aphrodite.
Thank you. As Phil said, we have a series of reports today. I appreciate it's quite a long set of papers, and hopefully this shan't be repeated in the future. But what we'll do, Sebastian and I will cover these reports in a little bit of detail to hopefully give everybody an opportunity to understand what they say and give you an opportunity to ask any questions you might have. So I'll pass over to Sebastian, who will take us through the first report, which is the external auditor's completion report for the year ended 31st of March 2021.
Thank you. So I think it is worth mentioning first that a version of this report was presented in sort of January 2023, our preliminary sort of findings. Obviously, that was a long time ago, and so whilst I am mainly going to focus on any changes from that position, and those changes sort of in blue in the report, I'm also just going to give a few of the key headlines again as well, just as I go through. So I think starting on the sort of page 4 of our reports and in the overview. So in essence, as I said, we did report our findings sort of last year at a stage when this was substantively complete, but there were areas to finalise, primarily in relation to property, plant and equipment. Since that position, I mean, there are no fundamental changes. We do have a few sort of additional findings, which I'll talk through later on, but fundamentally, we are not proposing any sort of modification to the opinion of financial statements, i.e. an unqualified opinion. We do not have any issues to flag in terms of the value for money work. And we have a report later on in this agenda pack just going through our sort of summary findings, both for this year and the subsequent 2 years. We are, as I said, sort of very close to being in a position to be able to sort of say, give our opinion on the sort of financial statements. So just sort of talking through some of the changes since the sort of last report. So on page 8, there was one just small part in blue where we performed an additional test in relation to sort of management override of controls. This is essentially, last time we presented this report, our journals work was complete. However, since then, there have been some sort of changes to sort of regulatory and methodological expectations of journal testings, whereby you should be looking at some journals even if they don't match any of your risk criteria. We did this, we didn't identify any sort of issues that you sort of need to be aware of. Moving on to page 9 of our report. So as I mentioned, valuation of non-current assets is the area where there is the most work still needed in our draft report. We have now completed that work. There are a few findings to report, sort of mainly just in relation to the sort of inputs used in sort of valuation. So this is, say, in situations where the valuation of a sort of property may be sort of based on its the internal area of that property. If there are errors in how that internal area has been sort of measured or communicated, then that would ultimately impact what the valuation is. And so the sort of findings that we had were just sort of situations such as that. But bearing in mind that we look at essentially every asset, given the materiality of the balance, the scale of the issues we found are fairly small in the scheme of things. There's only a handful of assets. The impact of these was not just to be material. However, we have just included in our appendix just the sort of detail of what we regarded the impact of those issues as being, and also just made a recommendation that the council just, I suppose as part of the next valuation process, just make sure that all of the status area of floor areas or land areas has, I suppose, been sort of checked and updated just to make sure there aren't any similar issues in the future. But as I said, these were not material issues from our perspective. And I said on the subsequent pages on valuation of non-current assets, there were, again, a few bits which have been updated, although I'm not proposing to sort of talk through sort of each part of that unless there are specific questions. Another area where, this is on page 16, as part of our revenue recognition risk, as I said, we finalised our work here as well. We did find one additional finding just to do with collection fund debtors, essentially a situation where debt had been raised, but effectively had been sort of raised in error. As you'll see in the tally of unadjusted misstatements, the individual debtors are very small values, around, I think, sort of 7,000, but the extrapolation was above our sort of triviality threshold. So we do just include that in our sort of summary of unadjusted misstatements. But in essence, all of the findings we had in relation to revenue expenditure, well, we did find an error. It tended to be of a very small value. And again, we just have to sort of extrapolate that on the basis, obviously we look at things on a sample basis, but these were not sort of large errors by any stretch. Next page, so page 17, sort of going concern. I think this is just to highlight that obviously when we originally did the work, we were looking at the medium-term financial strategy over a certain sort of forward-looking period. Obviously, it's now 2 years later than that, so we just referred to that here. But fundamentally, sort of, the principle of going concern, as far as public sector accounts are concerned, you will always be a going concern by definition. That is the nature of it. So I think we do look at going concern, but ultimately our conclusion is that even if authority did have significant financial sustainability issues, which is not the case here, it would still sort of be a sort of going concern, and therefore that's the correct basis of accounting. In terms of the schedule of unadjusted differences, which starts on page 22, so this contains the detail of the some of the new findings, so which is on collection fund debtors, that's adjustment 4, and investment property inputs, that is adjustment 5. But the total of these unadjusted differences, which would be an impact on sort of net expenditure, would be an impact of 171,000. That's again still significantly below our materiality threshold. And so we're not suggesting that the council sort of need to adjust for these, although as I mentioned, for the property issues, if there are input errors on the valuations, they should still be addressed for future periods. I don't think there's anything else that I need to bring up. I don't know, Aphrodite, if there's anything you wanted to flag.
No, that's covered.
Okay, thank you, Sebastian. Members, do you have any questions? Councillor Walsh.
Thank you. I have one substantive question and some particular questions, and thank you both for coming along, including Aphrodite. And I've asked previously. I was sent, as other members, I don't quite know when Braintree got this report, but it's for the year ended March 2021, and it was sent out on the 20th of November 2024, and you'd done an interim report some time earlier. So contrary to what was said in answer to previous questions, can you tell us specifically why this report is so late? I mean, 2.5 years. Last time your colleague talked about national factors, resource issues. He even mentioned, I think, prioritisation given to the NHS. But, I mean, that doesn't, I think, reflect very well on how you regard us as a client. So can you give us something specific as to why this report is so very late? Thank you.
I don't want to repeat what was previously said around the national issues with audit, because I think everyone is very well aware of those. There isn't anything to add in addition to that in terms of why this is so late.
Sorry, that doesn't answer my question. With respect and openly, we've heard about the national factors. We know about those factors, but why did BDO not give a level of priority that would have meant this report wasn't 2.5 years late? I don't think it's an unreasonable question. I think fees have been paid, further fees may be paid. I think it's a reasonable question. So I would like an actual and specific answer, please, Aphrodite. Thank you.
I'll have to come back to you specifically on that because I don't have anything, excuse me, to add to what was previously said. There has been a list of audit entities that have been in the very same position as Braintree, and we have been working through that list of priorities. There isn't a change to the answer, I'm afraid. We are now very much focused on getting through these audits that remain outstanding by the backstop deadline, which is in a couple of weeks' time. And hopefully this will all be in the past. And the very reason the backstop deadline was put in place was in order to address this issue with these long ongoing audits.
Thank you, Aphrodite. Councillor Walsh, would you like to?
Final specific
Okay.
point, and thank you for offering to come back to us. I look forward to seeing anything that you can supply on specific reasons. I do have a sort of sorry, I didn't switch it on. I do have a couple of specific questions, some of which I think your colleague may have alluded to or covered, but if just for completeness, I think what is still being finalised, I believe in page 14 there's a reference to valuation of non-current assets, which was touched upon. What is the control finding? And I believe there was a reference to an overstatement of £318,000. And are the three, this was on page 49, are the three final matters now fully completed, including the final review of accounts? Sorry, I've jumped over a few pages there.
That's fine. I'll start with the control sort of finding first, if that's all right. So, essentially, I think whenever we find any sort of misstatement, we do just have to consider what sort of the underlying sort of causes of that are. And so, in this case, we noted that, for example, I think one error which related to 318,000 you mentioned was specifically because the land area that had been used in the valuation calculation had been incorrectly transposed. The previous value had used a sort of hectares basis, and I think it's moved on to acres, and as part of that there'd been a mistranslation. So that's a very specific issue. It's not cases like the data was wrong, it's just that there was an input error at the stage in which it was used by the valuer. And whether that error is on the council's end or the valuer's end, I can't remember that specific situation, there should always still be that sort of level of check, just to ensure that, particularly for the larger assets, that everyone is happy that the inputs are correct. And so that is the context for the sort of control finding. In terms of the 318,000 specifically, what causes that is the basis for the valuations here is that effectively I can't remember exactly which asset this was, but effectively it's a case of the area of land for that particular asset multiplied by the expected rent, and because the rent's on a per acre basis, then value per acre rather than rent per acre, I should say. And because that valuation basis was partly based on the number of acres, then any input error from that would directly impact the valuation. It's a simple, arithmetical sort of side to that. In terms of what's being finalised, so our field work is complete. At the moment, we have one query for the council, and that's just something which is part of closing down the review process, where we have to stand back on sort of the different areas we've completed. So there's one substantive query which we're expecting a response on this week. The main thing that we still need to do is just make sure that, having received the final financial statements and gone through them, that we are happy that no further changes need to be made. We're happy that we have coverage of everything we need to, including where applicable sort of immaterial balances which aren't in scope for our testing. And in terms of the people who need to do that work, people's time being lined up, that is there in terms of those final stages. So it's not a case of additional testing, it's just a case of making sure that essentially everything is lined up as far as we're concerned.
Okay. Thank you, Sebastian. Councillor Prime.
Thank you, Chair. On the report, thank you very much. It's nice to read through it. Just a couple of points, and I'm referring to the language used into it. You refer in the report to various overstatements and understatements, and being minor amounts as trivial. What percentage or amount do you class as trivial? Because to me, if it's a pound, and if it's every time, it mounts up. And I just want to know what you think is trivial. Thank you.
So, triviality is very much an auditing concept where we have to think, if an error is above a certain threshold, we will report it. If it's below that threshold, we won't. However, that doesn't mean that errors below that threshold are ignored. What would happen, say, is we'd have to consider actually, is this representative of a wider error? So take, for instance, some of the expenditure issues, for example, where we had a sort of a 2,000 difference on the cut-off. That wasn't, that was below our triviality threshold, but on extrapolation is above our triviality threshold. So we do still end up sort of reporting it. And that would apply even if it was a sort of £1 error in theory. So I think that's our way of making sure we are, the risk of lots of small things having a big impact, they're sort of built into sort of how we do our sample methodologies. And again, I think in terms of over and understatements, again, it is based on that sort of same premise. I mean, sometimes it's a factual overstatement or understatement, i.e. we know it should be a certain amount, and the evidence says it's wrong by this amount. Where it's more judgmental, such as the property, plant and value, property, plant and equipment, we would be less likely to specifically say it's an overstatement or understatement, but we would essentially be of an opinion that we're happy it's materially correct, even though there's a range of estimates there. So,
can I add, the specific amount for this particular audit year that we considered to be trivial is £44,000. That helps.
So is that anything above 40 or?
Anything below that amount, we wouldn't report to you. Anything above that, we consider an amount appropriate to report.
Seems a high figure, 44,000. Thank you.
Councillor Edwards.
This might be quite a silly question, but were there any cases where there were errors to be discovered under £44,000? Or did the fact that you don't collect that data, I assume, because you're not going to report it to us? Is that the answer?
No, as Sebastian said, we did find errors below that, and we do capture those in order to see whether they together amount to a much bigger error or not. If they're individually small and below that amount, and they don't indicate that there's a bigger issue, then we wouldn't report them to you. Otherwise, we would end up reporting quite a lot.
Yeah.
I should flag that if we do find specific error as part of our sample item, we would still mention that to the council, even if it isn't significant enough to go onto this report, in case there's a correction that they would need to make.
And how do you arrive at that figure? Is it like a percentage of our budget?
Yeah, exactly. It is a percentage of expenditure spend, and it's then reduced quite a lot to cover for the potential of aggregate errors all coming together and adding up to a bigger number.
Okay, thank you very much. I had a separate question, actually. Just on the backstop date, are you confident that you're going to get these all signed off before the 13th of December?
Yes, we are working with all intentions of meeting that deadline for these 4 years of audits that are outstanding.
And as I understand it, you guys are working on the 2020 onwards, I think, and Mr. Bladen, who came here before, is working on the 1920.
Correct.
And the 1920 hasn't been signed off as yet, is that the case?
That is correct, yes.
Yeah.
So obviously there's a sequence of events that have to happen. 1920 has to be done first, 2021 and so on follows.
Okay, so the reports that we can see in front of us, they're not yet signed off, is that the idea?
Correct.
Okay. And everything is in place to get these signed off before the 13th of December. It's 12 working days. I appreciate it's quite a limited amount of time. They're sizable reports, and you're completely confident that you'll get them done in time.
Yes, that is the what we're working towards. There's a sequence of events. One of these governance and audit committees is part of that sequence of events that need to take place for this committee to approve these reports, management representation letters, etc., and the accounts, in order for us to then be able to sign those off.
Okay, fantastic. Does anything happen if you don't hit the backstop date? Not saying that I think, I'm sure that you will. But.
There's reputational risk, but there's no known consequences as such that I'm aware of.
Okay. Has the government set out, because it's the government's date, isn't it? Has the government set out any kind of a framework for what should happen if that date is missed?
They haven't set out specifically what would happen if that was to be missed. The expectation is that if there was a risk for that to be missed, they need to know as soon as that risk arises, and then there would be discussions between us, officers and government, around what the plan is for those to get signed off as soon as possible, and an explanation as to why they're not getting signed. In some cases there are legal issues or other issues outside of our and officers' controls that would impact that deadline, but that's not the case for Braintree.
Okay, could I ask as well that you loop in the chairman on those discussions as well, just so this committee is aware if there is some slippage to that date, because obviously we all have a very keen interest in making sure that that date is hit.
Absolutely. At this
Thank you
point,
very
we don't have any such risks. So,
Brilliant, that's very good to hear.
Yeah.
Thank you very much. Thank you.
Thank you. Councillor Van Dolkum.
Thank you very much. Can I just refer to page 14, which is valuation of the pension liability. It says in there that the gross pension liability is 248 million pounds, which is obviously the liability for future pensions for both pensioners and those who will retire. I understand that. But then it says, or above it, it says that the council's pension fund deficit was 54 million. What exactly is that? Because my understanding is that we, and I know this from previous meetings, that we do keep up with what we're asked by the pension fund, Essex Pension, to top up our contributions. So what would be the deficit then?
I think in terms of any questions on what the sort of council is doing in relation to that, there may be one I sort of pass over to Phil. But in terms of the audit side of things in particular, I mean, the gross liability, which I think I'm afraid I can't see the 248 million. Might have another page here. So I mean, the gross liability will fluctuate quite a lot year on year, sort of by nature, even if the asset base is relatively stable. So I think that, I mean, there have been situations, I think, in subsequent years, potentially including Braintree, I can't remember, where there has actually been the potential for a net pension asset, I think, because of changes in assumptions. But in terms of, I suppose, the council's obligations, should I pass over to you from that?
So if that's okay through you, Chair?
Absolutely.
Sorry, deficit.
Yeah.
Pension fund deficit.
Yeah. So as part of the year end, we obtain an actuarial valuation of the fund at that point, at the 31st of March. And the assumptions that the valuer uses at that time, the actuary uses at that time, is perhaps different to some of the assumptions they use when they are setting the employer's contribution rates. So that's where you can sometimes see, a bit of a mismatch. But essentially, what the council pays is set at the triennial review, which is done every three years, and that will set our contributions for a 3-year period on the basis of a plan to get the fund to back into balance. So that's assessed, and our contributions for that 3-year period are fixed based on that assessment at that time. So when it comes to the accounting, though, that's taken a snapshot at that time using current assumptions, and that's then reporting what the assessed net liability or net asset is at that point. And at this point in time, the fund was in a deficit position. Now that does change quite significantly year on year, because changes in things like discount rates have a huge effect, and that's just trying to put a value on the future value of payments that the pension fund will make. If you look at our more recent accounts, you will actually find that we've actually gone into a pension fund credit, so there's a net asset that we're showing at the moment in our accounts, but it does fluctuate quite volatile in terms of those year-end accounting positions. But from an employer's contribution rate, that is set based on that triennial review and set for a 3-year period.
Yeah, I'm sorry, it wasn't really a question for the auditors then, but thank you very much, Phil, anyway.
Yes, thank you. Councillor Ramage.
Thank you, Chair. I think probably I was going to ask a question on the pension thing, because I think to a certain extent, Phil, you've already answered it in as far as we had a debt of 527k, and then it went on to a credit of 450k, which brought out a balance of 977. Is that where you're saying it changes from year to year? Is that that particular situation? This is on page 21, by the way.
So is that 21 of the agenda or the auditor's report?
Auditors.
The
sorry.
auditor's report.
Yeah.
Okay.
And this was set in September 22, by what it says here.
So I think this is one of the audit adjusted differences, isn't it?
Seems a large difference, that's all I'm thinking. And what would be the normal figure you expect to be in that fund as such?
Yeah, so I think that the figures you're referring to there are one of the sort of changes that were identified, and I think that's where, when the actuary provided information to us for preparing the year-end accounts, at that point there would have been a certain level of estimation of what was going to happen. So, for example, investment returns, in order to give the information in a timely manner, they will have taken a snapshot of the investment returns of the fund at the end of February, but then subsequent to that they would get the actual returns for the year in question, and if that has a significant impact on the pension position, we would have then had to
Revise.
make an adjustment, and I think that's what that is the part of the consequences of there.
It just seemed a big switch around, that's all, at the time, and I
Yeah.
just really wanted to clarify why that was the case more than anything else.
Yeah.
Councillor Ramage, Suzanne may be able to offer some input into this
Oh,
as
okay,
well.
thank you.
So if you consider the year that we were in, that we're talking about, it was a time of great volatility in the stock market. So there would have been huge amounts of movement between certain points of time. And this was in the COVID kind of time, and things were moving around very, very rapidly. So you would be likely to see quite considerable swings. But what we're talking about here are book valuations. They aren't actual cash. So it's estimates at one point in time. So that there is no loss, there is no gain. It's just movements in valuations at any particular point in time. And when you have got volatility in markets, then you will see swings happen like this. And hopefully, is that helpful?
But in normal times you wouldn't get such a big swing, is that what you're implying?
Well, I mean, it depends what you think of normal times. To be honest, I mean, we're in a time of great volatility and have been since then. So it's part of the way that we... The fact that we have a funded pension fund and it does rely on the stock market to drive it, then you will continue. I think we'll continue to see some of that volatility into the future. But as I say, it's a book loss. It's not a cash loss. So that isn't what we're not. That isn't something that we're paying out.
Could I ask one more question?
Yeah, just before, Mark, as our financial services manager, is there anything you'd like to add on that point?
The only thing I would say is obviously the value. When we talk about the pension fund, we're talking about, I think a couple of 100 million. So that's what, 0.4, 0.5% change against their forecasted figures. So in terms of massive changes, it's not massive in terms of the overall pension fund.
what is, it's with Essex, is it, this fund? Yeah, okay, thank you.
Did you have a further
Yeah,
question?
just one other
Yeah.
question, under page 37, where it makes a comment about additional fees of 9,000. I just wondered what that additional fees is for.
The 9,000 of additional fees is in relation to the change in scope on the use of resources work, so specifically sort of value for money. So effectively, when the at the time of the 2021 audit was originally planned, it was the first year of a new code of audit practice issued by the National Audit Office, which sort of changed the sort of scope and overall reporting expectations on sort of on value for money work. And as part of that, they sent around guidance indicating what they would expect firms would, the additional work firms would need to do in order to be able to implement this sort of for the first year. And essentially as part of that guidance, they were sort of gave indicative fees for sort of different types of bodies, sort of ranging from obviously sort of district councils to sort of unitaries and London boroughs, and also based on the risk profile of different organisations. And effectively the 9,000 is something that was it was informed by sort of that guidance. And so yeah, in essence, because it was a change in scope of the work, that's why the NAO felt it was appropriate for sort of additional fees to be agreed for that.
Okay, thank you.
Thank you, members. Just before we move on, I've just got a few questions myself, if that's okay. So I think you started off by presenting a report saying that we'd previously seen this in January of 2023, is that correct? So obviously we're now here a month away from 2025, so it's not a great deal of added work, because am I right in thinking this report live as today, just to clarify? So is this like the report as it is of today, is that correct?
So it was drafted on the 12th of November, but there are no
Yeah.
fundamental changes.
So could you just clarify for me, because it says on page 8 of your report in blue, so an updated version, it says our work remains subject to finalisation, so can't be finalised, of internal quality review. So as we've heard, we're 12 days away from the backstop, but it's still subject to internal quality review. What does that involve?
So that is essentially sort of Aphrodite's review as the sort of key audit partner. I think sort of at the time the review went out, there were sort of still some areas going through that review. Those areas have since been reviewed. So I see what you mean. Yes, so there has been that change has occurred since this was drafted. So,
yeah. Okay.
yeah.
So you can confirm that the quality review has taken place up until this point. Is that correct? Or because I'm still a little bit unclear whether or not there's, because I understand that we're one of many councils or organisations that have numerous audits over many years that need to be completed. And that means there's going to be quite a lot of work to do over the next 12 working days. How many audits roughly do you have to complete? Obviously you've got, am I correct, there's 4 here at Braintree. So out of the 4 we have, what's the amount that you have to get completed within the next 12 working days?
So me personally, I have 2 other authorities.
Yeah.
So 3 in total with Braintree.
Yeah.
This internal quality review is substantially completed. However, we need to do our final review on the final statement of accounts, which we have, I believe, received today. So obviously that needs to go through. I don't expect that would cause any issue in terms of meeting that deadline. But until that's done, we can't say it's all done.
Okay.
I hope that makes sense.
Yeah.
I appreciate the wording is a little bit
Yes. Okay.
hard to understand.
One other thing, I think, Sebastian, you mentioned that there was subject to a reply from Phil and his team. You said that you were waiting a response on the matter. Could you just clarify what that response is?
So this is part of the sort of finalisation of that sort of quality review. Essentially, there are some clarification queries we had in relation to information technology general controls. Essentially, when we sort of went through our file, sort of, I suppose, doing a once-over,
Yeah.
there's some areas where we had well, in one case we had raised a query which hadn't been responded to previously. In another case, there was a situation where actually there's a query we probably should have raised at the time but hadn't. Both of those, I suppose, they're fairly short form in nature, but they are just to make sure we have that complete understanding for our file. And I just discussed them sort of with the sort of financial services manager sort of earlier this week, and those should be with us sort of fairly shortly.
Okay, no, I appreciate that. I just think from a report that was substantially written in January 23, to be requesting that as late as where we are now is very difficult on the team, as you can appreciate. So hopefully we will get to the point by the 13th of December, and we will hope that we are at that point to be able to do that. So yeah, I take your word. I do appreciate the workload that you have, but I just hope that we can get there. And I know Phil and his team, and along with Mark, will be absolutely delighted if we can get to that point. But I know, talking to Phil and Mark, they are very keen. They will put what they need to put in place. I just hope that we can get to that point, because I understand that along the way officers have worked, supplied things that have been required, and I don't think it's a fault of officers here at Braintree as to why we are in this position. So I do hope that we can get there, particularly with all four of the audits. And I appreciate Aphrodite, one of them isn't. So my final question is, you're reliant on Steve Bladen completing his audit before you can action yours. Do you have any insight? Obviously Steve's not here with us tonight. Where are we with that in order for this to be completed?
Yes, correct. So 1920 needs to be completed first. It's underway. Sounds wrong. It's substantially completed. There is some final review that needs to take place on the final accounts that have been received today, and sort of tidying up of files. That all happens. That does unfortunately have to happen at the end after this committee has taken place. Yeah. So me and Steve are in discussion around making sure that happens, and we're confident that we will meet that backstop deadline. As I said, we don't have at this point any risk that we anticipate meeting that deadline. I appreciate it's 12 working days, but unfortunately until this committee takes place and the accounts are approved, certain things can't happen within our file until this has happened.
Okay, no,
I
thank
hope
you.
that helps.
Yes. So members, we've got a few things that we've been asked to on this report, so please bear with me. So firstly, we're asked to note the report and external auditors' revised audit completion report for the financial year which ended on the 31st of March 2021. We're also asked to approve certification of the letter of representation by the Section 151 officer and chairman of the Governance and Audit Committee as set out in the BDO report. And finally, we're asked to note that the final audited statement of accounts for 2021, with any amendments agreed between the Section 151 officer and the external auditor, will be published on the Council's website following a receipt of the final audit opinion. So to be able to do this, I am going to have to ask for a proposer to move the recommendations.
May I ask a question? Sorry, Chair.
Yeah.
Forgive me, this is slightly unusual and it may need a bit of proprietary advice. I mean, if one says noted, it implies generally accepted. Can we have a slight tweak to that? Would it be appropriate, given the delay and that there's still some work and not an enormous amount seems to have been done since the earlier report, could we use the terminology noted with reservations?
Just bear with us, I'll just take some advice. Is there any? Yeah, I think we all have reservations, but for the terms of the for the purpose of the meeting, I think noted is suitable on this occasion, and we will trust that everything will be above board and in place. But I do appreciate your concerns with that. Okay. So could I have a proposer, Councillor Ramage, and a seconder? Thank you, Councillor Prime. So all those in favour, please indicate by show of hands. Thank you. That is unanimous. With reservations, yeah. But the recommendations have been approved. We will now proceed to agenda item 6, which is the External Auditor's Combined Audit Planning Report and Audit Completion Report for the financial years ended 31st of March 2022 and also 31st of March 2023. So this report is set out for agenda item 6 on page 55 to 121. I will invite both Phil. I don't know if you have any more to add on before this report, but other than that, it will be handed over to Aphrodite and Sebastian to set out these reports.
Not really, Chairman. So this is dealing with the 2 years where obviously we're not going to have an audit, an opinion. So yeah, I think that. But happy to hand over through yourself.
Absolutely. Okay, Aphrodite, over to you.
Thank you. So this item, as mentioned, covers the 2 years, 2022 and 2023. There are 2 separate reports, however, they both are identical mostly, other than changes of the date and also the materiality numbers. They cover, they are a combined planning and completion report that we have to present to this committee, and they summarise the strategy for the audit of the financial statements for the 2 years. They set out materiality, they set out the key risks and any results. So this is a required communication according to auditing standards that we have to share with you. So if I go to page 62 of the pack, this page essentially sets out the summary of the audit matters. We have performed minimum required procedures per the guidance received to enable us to close off these audits by the backstop deadline that we have mentioned is the 13th of December. And what that means is that both of these audits will be disclaimed because of the limitations imposed by the backstop deadline. The following page, page 63, sets out that overview and explains a little bit more what that looks like in terms of the backstop deadline limitations. Page 64 sets out the materiality numbers that we have identified and used when we reviewed these statements of accounts. And then on page 65, we set out the significant risks that we have identified based on the previous knowledge we have of the council. However, as we haven't concluded our detailed planning and risk assessment procedures, there might be other risks that are not included in this report. So on the following pages, we set out the risks in more detail and the work that was completed, but obviously due to the limitation of imposed on our time by the backstop deadline, we haven't completed any work on those areas. So if I skip on to page 73, this page talks a little bit about the work on the use of resources. We are required to be satisfied that proper arrangements are in place to secure economy, efficiency and effectiveness in the use of resources. And in completing that work, we have not identified any matters that we need to report to you. Our commentary is included in our auditor's annual report, which is the next agenda item. So finally, if I go on to page 80, that sets out the representation letter that this committee needs to approve and that we would need to have in place before this audit can be concluded. I won't cover the following pages, they are fairly standard appendices, so I'll stop there and open up to any questions.
Thank you very much, Aphrodite. Councillor Walsh.
Thank you, Chair. I don't know if it's any relief. I'm not going to repeat my previous question, but your answer, about any specific reasons, I would be very grateful if there are any for these other years as well. And I don't mean it by, and I don't mean by that I'm assuming there's anything wrong, but as elected representatives, this is governance and audit scrutiny. It's not a personal thing. I think a primary role of ours is to see that things are in order. There's use of public funds, probity, financial integrity, and proper payment of fees. So that's the reason. Just one specific thing on this report, if I may. On page 85, I noticed the statement BDO, and I'm quoting, is totally committed to audit quality. Then if I go back, as it were, to page 66, I think of the agenda report. And I do have a question about this. The following phrase, and I'm reading it out, stood out to me. Management has the ability to manipulate accounting records and override controls that otherwise appear to be operating effectively. Is that in as a generic statement that you more or less put in all your reports? Or is that put in relation to any particular, or either of these 2 years here at Braintree District Council? Because if so, I'd be quite interested in that and possibly, curious. Just one question.
Thank you.
Thank you. So international standards of auditing require us to assume that there is always a risk that management can manipulate financial statements, and that is what drives this risk. It's a mandatory risk that we have to have on all audits, and so that's why that is included in here. We haven't identified anything that would lead us to believe that is the case here. However, we have to assume that that is a risk, and therefore it is included in here. The excuse me. The reference to BDO's commitment to quality is slightly separate to this particular risk. It's more around the work that we do, which needs to meet the quality of our regulators. Does that answer the question?
I think so. So on the first one, which is the one I'm particularly interested in, you haven't found anything to raise concern. I can see why you look at it as a generic risk, but you haven't seen anything of any concern here at Braintree.
We haven't, for the 2 years where we have done the full scope audits, we haven't identified anything that would give us that concern. However, for these 2 final years, 22 and 23, as I say, we have done very limited procedures, so we cannot give any assurance on that particular risk. Although we haven't identified anything that would, if I had identified something, I would have to report it to you.
That qualification has some import, doesn't it? Thank you.
Councillor Van Dolken.
Thank you. Just looking at your page 18, page 75, audit fees. So year ended March 2021, the one we've just discussed, total fees £90,000, and for this one we're talking about now, and presumably for the subsequent one, to be confirmed. When and how do you do this, if it's not embarrassing our officers?
So the Public Sector Audit Appointments Body sets the fees that we and that fee, because obviously these 2 years are not full scope audits, they are limited procedures, that fee is still under discussion. So as and when we have that agreed fee, we'll be able to share that.
Okay, thank you all. If there are no further questions, again, we're asked to firstly note the external auditor's combined audit planning report and audit completion report for the financial years ending in the 31st of March 2022 and also the 31st of March 2023. We're also asked to approve certification of the letter of representation, again by the Section 151 officer and also myself, the chairman of the Governance and Audit Committee, as details in the reports of BDO. And finally, to approve the publication of the Statement of Accounts for the financial years 2021 to 2022 and 2022 to 2023, subject to any final changes being agreed by the Section 151 officer and with the external auditor. So again, please can I have a proposer to move the recommendations? Councillor Ramage, and thank you, Councillor Van Dolken, for being seconded. So members, the recommendations have been moved and seconded. I will now put this to the votes. All those in favour, please indicate by show of hands. Thank you. That is unanimous. So the recommendations have been approved. This now leads us on to agenda item 7, which is the External Auditor's Annual Report for the financial years ended the 31st of March 2021, 31st of March 2022 and the 31st of March 2023. This is agenda item 7, which is set out on pages 122 to 140. And can I please invite Phil Myers and Aphrodite to set out these reports? Phil.
Yes, no, I've nothing to add to this, but other than I think this is quite an important one because you've got the issues around the value for money is sort of articulated in this one, and I think that will be very interesting to members to read that.
Thank you. So Aphrodite, if you'd like to set out the report, thank you.
Thank you. So this report covers all 3 years from the end of March 21 through to the end of March 2023. This report essentially summarises the issues arising from the audits of those 3 years, as well as providing some commentary for the value for money work that we undertake. You'll see there's the unqualified opinion and the 2 disclaimed opinions with a cross on the specific date, so that will be updated as and when those opinions are issued. The first page, the summary, sets out the conclusion on our value for money, where we conclude that we have not identified any significant weaknesses for those 3 years that we need to report to you. Then on page 132 of the pack, we summarise the work that we have undertaken for the value for money for the authority. The specific criteria are listed on there for the work that we have to undertake. The scope for these particular years was reduced to take into account the backstop deadline. And the pages that follow show a bit more detail on the work that we have undertaken. But the specific criteria cover financial sustainability and governance. Under the previous scope, there would have been 3 criteria. So on page 135 of the pack, we set out the work we've done under financial sustainability, and we did not identify any weaknesses that we need to report to this committee. Page 137, we set out the work under the governance criterion, and again, we have not identified any significant weaknesses or recommendations that we need to bring to the attention of this committee. So that is the end of this report, and I will be happy to take any questions.
Members, does anybody have any questions? Councillor Walsh?
A slightly different question you may all be relieved to hear. You mentioned Aphrodite, and I thank you for being clear about this, given the backstop, and we're not alone, that the scope has been reduced. But that does raise another issue, and a couple of them. So compared to, quote unquote, a normal year, if there wasn't this pressure, how comprehensive are these reports? What else would have normally, what would have been done in a normal year that hasn't been done? And given that, what level of risk is there that, given whatever the reasons, you've had to cut back on the scope, in your own words, that it's been reduced? And would you be able to put a level of confidence on this, for us overall? 60%, 90%? I'll stop there.
Thank you. So the previous scope would have been 3 3 criteria. all of which would have had 14 separate questions that we would go through. The new scope has these 2 criteria, which is financial sustainability and governance, with 8 sub-criteria, if you like. So it is reduced, but it's not reduced to nothing. It's gone from 14 down to 8. For the year ended 2021, we did actually cover the full scope in our work. However, we're not required to report back on that. So from that work that we undertook, we didn't identify any significant weaknesses across any of the 14 sub-criteria. For the following 2 years, our work only covered the 8 criteria, and I don't think I'm able to give a percentage assurance. However, again, we haven't identified anything that would give any cause of concern around value for money arrangements for this particular council. I hope that helps.
Just one point of clarification, and then I will stop. You mentioned from 14 to 8 criteria in the latter 2 years. Can you give us, in summary, what sort of things, what has been left out? The difference between those 2 numbers.
Yes, absolutely. So I think that the main category that's gone out entirely, and this affects 4 of those sort of 14 criteria, is what's called the 3 E's, improving economy, efficiency and effectiveness. And there was a rationale for this. So when we were discussing with the National Audit Office what the scope of this reduced value for money would be, the idea is that, because they knew that this work would be being done in the context of these backstop years, really the focus was meant to be on the areas which were most likely to present issues. And the determination was that, broadly speaking, if an issue had occurred, it would be in the financial sustainability or governance areas. The logic behind this is that on the 3 E's, that's about continuous improvement. And so even though obviously that is important, things relating to continuous improvement are less likely to crystallise in what might nationally be regarded as major issues. Again, in contrast to, say, financial sustainability, where we know there are some local authorities who have sort of real issues on that front. So I think the other main change is, I think, within financial sustainability and governance, there are some, what you might call, I suppose, more residual areas of that, where it's thinking about, how does the relationship between the 3 E's and financial sustainability. I can't remember the exact sort of sub-criteria, but essentially they picked the criteria where they felt, the 8 which were retained, where it was most likely to be a risk. So there was a thought process at a national level in terms of why it ends up those 8 and not the others.
Thank you. I just have a question myself. So we have 2 disclaimed audits and an unqualified. What are the? So they're 2 of the types of audits that can be given. Were there any other outcomes that could have been a possibility if other work was finalised, and what would they be?
Yes, so clean opinion,
Yeah.
which is the unqualified, there could be a qualification where there's an error identified, significant error, or there's potentially a pervasive type error that covers lots of areas of accounts. So there are lots of different opinions in between the disclaimed, where essentially we can't give a view, and then the unqualified opinion.
Okay. And I suppose this is a question to Phil as you're here this evening. How does that satisfy yourself that we have 2 disclaimed audits and an unqualified audit coming before us this evening?
Well, I don't think anybody would be happy that we've got 2 disclaimed opinions, but I think that we've got to accept that's the reality, and I think everybody wants to move on and get back to some kind of normalisation. So it's in some sense it's a gap in our external assurance that we can take into subsequent years, but I think the fact that we've got 2 prior years that are unqualified and very little issues in reality identified. I think that just follows a historical position for this authority. So I think, I think our track record for many, many years has been very sound. So I think we take comfort in that, but it's not, it's not the outcome that we envisaged a few years ago, is that we'd have 2 years of disclaimed, and it will take several years before we can get back to a position where the auditors can give unqualified opinions. So I think the committee will need to be aware of that. Once we get through this piece and we've got the backstop date and this is dealt with, there will be some modified opinions or disclaimed opinions that we will continue to get, purely because the auditor will have to build the assurance over several years that they would have normally got from the fact that those 2 years would have normally have had an unqualified opinion. So, but yeah, not what we would like, but we say the circumstances are as they are, and we look to move on from this.
Okay, no, thank you for your view, Phil. Councillor Van Dorkum.
Thank you. Could I just ask Phil, we have, of course, a very competent internal audit department. How far does that go in making up for the lack of a qualified opinion for those 2 years?
Well, as you know, this committee obviously receives the work of our internal audit section, so you'll appreciate the extensive nature and the rigour that Angie brings to that function and with her team and that. So I think that is an important element of gaining assurance over the council's arrangements and its and its ability, the controls and the like that are in place that will ultimately support us in terms of our financial statements and the work around the value for money and stuff. And so obviously we've already heard that on a value for money use of resources basis, the auditor's not found any weaknesses there. And I think we can take comfort from the work of the internal audit team that gets reported regularly to this committee.
No. Okay, thank you, members. So if there are no further questions, we're asked to note the external auditor's draft annual report for the financial years which ended on the 31st of March 2021, the 31st of March 2022, and also the 31st of March 2023. And for this one, please, can I take it's been noted by show of hands, please? Thank you, members. So, as this report has now been noted, we will now go on to our final agenda item of the evening, which is agenda item 8, which is the external auditor's annual audit letter for the financial year ended. So it is a bit going back in time here, but I'll explain why that is in a minute, to 31st of March 2020. So, unfortunately, this was sent out separately, as we didn't quite get it sent to us on time to make it into the agenda pack this evening. So that's why that's been added on as agenda item 8. So we've just covered off 21, 22 and 23, but now it's our opportunity to look at from the 31st of March 2020. So could I please ask either Phil, I'm not sure if you have anything to add on this item, so maybe it'd be best for Aphrodite if you'd like to just lead straight on to this report, please. Thank you.
Thank you. I'll hand over to Sebastian, actually, who will cover this report.
Thank you. I think the first and overriding thing to flag is there's nothing new in this report. There's essentially a summary of the 1920 audit and also the sort of any sort of findings from that audit and the VFM work. This is meant to be done at the conclusion of the audit. It's meant to be a condensed form as a executive summary of what occurred for the audit during the year, and that is what it is. I think all of the findings here in terms of what's in the financial statements and responses to individual risks, and also the section on the use of resources is, as you would expect, sort of mainly drawn from the audit completion report, which was discussed here in October. So I'm not proposing to go into any more detail unless there are specific questions.
Just to start, my only question is, for what reason has this one not been able to be signed off before today? Because we've had assurances numerous times about 1920. That at one point I recall, probably back in January 23, I think it was, that it could be done and signed off within up to a month. And now we're here nearly 2 years later, and we're still not quite there yet. So how comes there's been such a delay? Because we're talking about reports of 1920, and again, I know other members have commented on that already this evening, but this one in particular, every time we hear that there is no major findings, there's no real concern, but yet again, we still haven't been able to get it finalised. So what's been the barrier this time for that?
I think in terms of the matters already discussed, I think appreciating we may not be able to give you an answer that's sort of satisfactory from the committee's perspective. I'm not going to sort of, I suppose, go into sort of, I suppose, repeat some of the things that sort of Steve would have discussed on previous meetings. In terms of specifics on 1920 at the moment, as I said, we have received the final set of accounts, so we do still need to review those and conclude on those. There are one or two matters in relation to, I think, I was talking earlier about the 2021 findings in relation to property, plant and equipment. Partly as a result of those, we've had to do sort of a consultation internally, just in terms of actually making sure we're I suppose, 100% happy that that doesn't have an impact on 1920. Our view is that, you know, that is not going to be an issue, but we still have to sort of run through that process. And I think the other thing is simply the, as Aphrodite was mentioning, just the running order in terms of all the sort of opinions that have to be given within that, so within the next sort of 12 working days. But I appreciate in terms of the sort of fundamentals, in terms of why is it November 2024.
Yeah.
I'm afraid I can't really sort of say add any more. I can only really comment on this.
Could I ask a slightly similar question, but in a different way then? The reason that this has been circulated late to members was because this wasn't provided by yourselves to Braintree District Council in line with the deadline to publish it in time. So as this is a crucial audit, 1920 has to be signed off for Aphrodite to move on with everything else. Can I have some answers to why this wasn't sent to us in time before our reporting deadline to members for tonight's committee meeting? Because if that can't be done, a simple agenda item for a meeting, how are we going to get this 1920 committee in time within the next 12 working days?
Could I take that away and speak to Steve, my colleague?
Yeah, I would urge
responsible
you to.
for this, and then provide because as Sebastian said, I don't think we can provide a response that you would find satisfactory at this point.
Yes, I urge you to do that, because as you know, you can't complete your work if that work isn't completed.
Correct.
So I would absolutely urge you to do that, because it is essential that there's joined up thinking within your organisation to enable this work for our organisation and our council to be able to run effectively. So please do that. I do appreciate that. Thank you. Sorry, members, does anybody else have any other questions? Okay, no. So just bear with me for 1 second. So we are asked to note this report this evening for the financial year, the annual audit letter for March 31st, 2020. And can we please have this report noted by a show of hands, please? Thank you, members. That report was partially noted, I see, or the majority, I believe. So it's still noted, the majority. So, members, this item concludes the business for this evening. The next meeting of our committee is scheduled to take place on the 15th of January. So thank you for all of your attendance this evening. and also those watching on tonight's YouTube broadcast. I will now close this meeting of the Governance and Audit Committee at 8:29, and I wish you all a very good night and a safe journey home. Thank you, members. Thank you.